John, well, thank you very much again for joining us here in Cape Town, the One-to-One conference. Been here for the last day and a half. First of all, just give me a sense for what's the sentiment you're picking up from mining resource investors at the moment?
This is a lot more upbeat this year. If we compare it with last year when everybody was wondering where the world was going to go and how they were going to survive, this is completely different. Companies are looking more optimistically at what's going on. There's a lot of new technology, new energy, materials being talked about here. Companies with new discoveries, and actually the money they've had in the last few years, they're now adding value with that money. They're able to talk about that. They've got better grades, they've got better technology, better recovery rates. It's all looking pretty good.
And in terms of the trends that you're seeing across geographies, across sort of asset class, commodity classes, what are the sort of things you're sensing that there's interest for?
Well, the companies going into new regions like Ecuador and some of those countries which were a bit out of bounds in past years, and that looks good. But people re-looking at historical mines in existing regions like South Africa, for example. And so there's a bit more of that going on. And again, people adding value in these areas with often combining some new ideas, new developments, new economic ways of looking at things, better focus on grade. So whereas they might have looked at 1 million ounces at 2 or 3 grams a ton, now it's 500,000 ounces at 7 or 8 grams a ton. And that's more about focus on money and returns for investors. It's a better way to do things.
And you've also appeared, I think you were presenting at the conference yesterday, talking a bit about the impact that inflation might have across the industry and the economy. What would you say are the main key points, key takeaways from that?
Well, we started off talking about management. It's all about management. Find people who really understand what risk is all about, who know how to put things into action. And then, of course, understanding what's going on in the world. What changes are we seeing? Not only are we seeing people looking for new materials, rare earths, lithium, stuff like that, but there's likely to be a trade war of some sort. We've got Donald Trump saying that he's going to put up trade barriers with China and places like that. And of course, China may well respond by restricting the supply of rare earth minerals, lithium carbonate or lithium metal, the stuff that people make batteries out of, and a whole bunch of other materials here. So if we get this trade war, we know Donald Trump wants to build a lot of infrastructure. We know he wants to raise, he's going to need to raise money for that. He's going to have to print a lot of cash. That's going to create inflation. Now, you need to get ready for that. One of the beneficiaries of that is commodities. Now, the flow of dollars back into the States for when Donald's looking to raise all these trillions of dollars is going to cause some problems. What happens in countries like South Korea when they think their currency is about to collapse? They buy gold, they buy copper, they buy anything that is dollar denominated. Again, it's another positive for the sector. So these are key issues to look out for. There's a lot of moving parts, but they generally are moving in the direction to benefit the miners.
Well, John, as ever, very good talking to you. Thanks very much for your time today.
Thank you.